Just got off work, about to take the elevator to go to my hotel room while I'm on this business trip. So check out this new Samsonite backpack I got from Amazon Day or whatever, Prime Day. It's freaking sweet, man. I used to have this like $20-$30 like bag, like Lenovo bag also from Amazon, but it just made me look like a freaking student. Like, dang it, man. Like, I wanted to get something a little bit more like respectable and more mature looking, so I got the leather bag. So I like it, man. It's pretty sweet. Real quick, let's just take a second to admire the freaking hotel room, man. It's beautiful. Don't worry about the not made bed, but the living room action, you know what I'm saying? The purple, I'm matching the purple. Big windows, nice greenery outside. Love it. It's not the greatest view of all time, but hey man, I'll take it. This has been the best business trip ever. They got me in such a nice hotel. I got 24/7 food down at the employee dining downstairs, so it's freaking awesome. It's like buffet style, so I can just eat as much as I want whenever I want. And work hasn't been that bad. But anyway, guys, I hope finances have been great for you. Shout out to everybody watching on this channel. We are at over 110 subscribers. I know that's not a lot for YouTube, but dude, for a passion project for me where I'm just trying to connect with people who are into stocks and finances, real estate, and I get to chat with you guys in the comment section. Honestly, 110 subscribers, kind of a dream come true. I didn't know I was gonna hit it in like 2 weeks, so I'm really, really happy with that. I'm having such a blast talking to you guys in the comment section, so please keep it up. And yeah, I just wanted to show my gratitude to you guys. I love making these videos, man. It really is just for fun. I don't make any money. I'm not here trying to sell or monetize this channel anytime soon. Let's just keep talking about stocks. Let's talk about investing, and let's make this freaking money together, guys. Enjoy the rest of the video. Yo, what's going on, Drive in Dollars fam? Francis back here, and I just wanted to talk about my new freaking obsession. And this is a new stock strategy that I learned where it's literally impossible to lose money. And I'm gonna go over that today and the trades that I put in. Just a couple disclaimers. This isn't financial advice. You guys do what you want. I'm here just to tell you what I'm doing, what I learned, and I'm gonna impart that knowledge to you guys. And yeah, I'm just sharing possibly another tool that you can add to your toolbox of investing and making some money, because that's what we're all about here. Forgive the messy background. There's a bunch of blue collar stuff I'm doing in the house. You guys can see all this freaking paint, and I got the ceiling taped up. I'm putting some coats of paint on the ceiling for when I get the new tenants to move in here, because this is gonna be a rental property. But anyway, the strategy is selling covered calls. So essentially, it's the other side of like when you buy a call option. So this isn't a tutorial on this at all. I am no expert. Like I said, I'm just starting on this, but I'm just gonna share with you guys what I know. So with call options, this is not what we're doing. A call option is a contract that you make with a seller, but don't worry about the seller for right now. Me, as the buyer of a call option, is I am making the agreement with someone that I can buy a particular stock at the strike price or a set price by a particular date or the expiration date. So for example, let's use a mythological stock, right? Let's say I'm gonna make a call option to buy stock ticker symbol XYZ for $25 by August 1. Right? And the price right now is $20. So I'm making a bet that it's gonna be higher than 25. Because what happens is by August 1, if the price is $27 so $28, I'm gonna exercise that call option to buy those stocks at $25 because I bought the rights to buy it at $25. And then I can then sell it for $27 at that same day, and make the $2 profit for the stock. But when you do a contract, it's always for 100 shares. So then I would make $2 for each stock times 100. So I'd make $200. And so for me to make that agreement with someone has to be willing to sell me those 100 shares on August 1st for $25. And for that person to have the obligation to sell me that, if it hits a strike price, I pay that person a commission or a premium, which is a fee that I pay that person. Let's say John, I pay John because he's gonna be obligated to sell me those shares at $25 on August 1st if it hits $25. That's the agreement. Only if it rises to $25, because let's say today stock is XYZ is $20. Strike price for the call option that I'm buying from John is $25 by August 1st. Time goes on, August 1st hits, the price of the stock is now 27. Me and John are in an agreement that if it hits 25, I will buy it at 25 each. So I will buy one contract's worth, which is 100 shares. So I will buy 100 shares from John at 25. So inversely, John has to sell me that stock at 25. Now, in a covered call situation, I am John instead. I am the one selling the contract. And if you're John in this particular scenario, the person selling the call contract, it's impossible to lose money. And let me explain. There's only two scenarios that can happen if you're the one selling the covered contract, the covered call contract. So one scenario is stock XYZ is $20 today. Let's say it's July 20. Forgot to say that. Today's July 20, all right? For the rest of the video, the day is July 20 because today is actually July 20. It's a Sunday, so market's closed. Anyway, I digress. Stock XYZ is $20 today, right? I am gonna sell Francis a contract that says if it hits $25 or higher by August 1st, which is in 10 or 11 days, I have to sell him the stock at 25. Even if the stock goes to 50 or 30 or just 28, as long as it's above 25, I have to sell it at 25, right? And so the two scenarios that can happen from that is August 1st comes, I have that contract, the stock price goes to 23. XYZ goes from $20 to $23 by August 1st. It is below the $25 threshold, so I do not have to sell John the shares at 25 because it didn't meet the agreed upon strike price of 25. But here's the kicker. I got paid, let's just say $20 as a fee or a premium for taking the risk of making the obligation of selling it at $25 once August 1st comes and it hits 25. But it didn't hit 25. So I don't have to sell my shares at 25, but I still get to keep the fee, the premium, which is good. That's scenario number one. Scenario number two is August 1st comes, the strike price is now $27. The price of the stock is now $27. It meets the strike price of 25. All right. And so now I'm obligated to sell those stocks to Francis for $25 each because that's the contract, that's the agreed upon price. Now, the price of the stock is 27, but we agreed that if it's either 25 or higher, I have to sell it at 25. So I sell 100 shares, one contract's worth, for $25 to Francis. Now, it's good for me because let's say I bought the stock at 20 and now I make $5 on each of those shares, but I could have made $7 on each of those shares because it's 27 now. But since I put it under contract, I have to sell at 25. So my profit is capped at 25 bucks, right? And then Francis is now going to be able to buy those shares at 25 and sell them for 27 just like that because it met the strike price. So he'll make $2 for each of the 100 shares, so he'll make 200 bucks total, right? And so you see how that could be good for me as the person who's selling the contracts. Selling the contracts, aka selling a covered call. So I'm selling the call option, but what makes it covered is that I actually already own one contract's worth of XYZ stock or 100 shares, meaning I actually have the 100 cells to share. If it wasn't a covered call, it would just be a naked call contract. I don't own 100 shares of XYZ. So what would happen is when August 1st comes and then the stock price hits 27 and we hit the strike price of 25 or higher, then that means I have to go out and buy it for 27, then sell it for 25. I would lose $2 per share. How crazy is that? And so that's why I wouldn't want to do naked call contracts. I want to do covered call contracts. All right. And so that's probably not the most clear explanation of that. Rewatch this if you want to. I'm not here to give a tutorial to you guys. I could give a more clear explanation this later on with like a whiteboard or something. That'd probably be a good idea. I'll do that. But yeah, this is my new obsession right now. I started employing this with all the stocks that I've had that I have 100 or more shares. You have to do it in 100 share chunks, which is one contract. You can't do like 0.5 of a contract, which should be like 50 shares. Can't do that, at least on Fidelity. And so I have a bunch of covered calls that I placed, and I'll put screenshots somewhere on the video, but I also have a logbook of the covered calls that I've been doing. I'll put a screenshot of my logbook as well. But yeah, this is my new obsession, because what's really cool about it is that like I said, it's impossible to lose money if it's a covered call, because it's either it doesn't hit the strike price and you just get to keep your premium and the contract will expire worthless, right? Because you don't have to sell your shares if it didn't hit the strike price. Or it does hit the strike price, but I bought the 100 shares for the contracts at a lower price than the strike price, so I would just make that difference, albeit the profit is capped, but I still make profit. So that's the beauty of this covered call strategy. And so right now I put in some covered calls with Plug, with Celsius, Fubo, and Honest, in all at different time frames, all at different limit prices and number of contracts, and you guys will see that on the screen. So I know you guys are checking it out right now. Well, I guess let me just do a quick overview. I got 3 contracts with Plug, $2 strike, July 25. I got Celsius, I got 1 contract with a strike price of 53 for August 8. Fubo, $5 strike, 3 contracts for November 21. And then Honest, $5 strike, 5 contracts for also November 21. And so already I put all these trades in like a span of 2 days, and it equals to something like $636. So I've made over $500 this month. So I have one expiring July 25th, another one expiring at August 8th, and then the other one expiring at August 8th. So once those expire, I'm gonna roll them into a brand new, so they'll expire, you know, hopefully whatever happens, whether it gets exercised and it meets the strike price, or it just expires worthless for the person buying it, and then I just get to keep the premium. I will just open more covered contracts. Hopefully, I'm gonna do it for the end of August or the first week of September, so that I can get it kind of like on a monthly roll, so I can kind of keep a better timeline in my mind instead of the dates being wacko all over the place. I do have those 2 that are for November 21st, and those are the big money ones, because you know you'll get a bigger premium with a longer time horizon. And so with those ones, I guess I'm just gonna leave them alone until November 21st, unless there's some moves I need to make with those in terms of if I want to close those earlier. But my goal is to get $500 a month. That'd be a really cool game to play. God, I hate to call it a game because I'm not gambling here. I just want to see if I can make this a little passive income source for my portfolio. $500 a month, like consistently, would be a really cool benchmark to get to. And it's almost the end of July, so maybe I'll put in a couple of like 1-week contracts just to get me from July 20th to like 27, and then I'll put in some more like first week of August. So we'll see, man. I'll definitely keep you guys updated on all this stuff. Sorry, I'm so sorry for like the horrible explanation of call options and covered call options. I was gonna say, I promise I'll give you guys a better explanation on a whiteboard, although I don't know if I'm gonna have time to do that at some point. I'll get Lily to hold the camera in front of my whiteboard upstairs, and maybe I'll give a better explanation. But you can just rewatch the first 8 minutes of this over and over and over again because I like messed up my words so much. Anyway, whatever, man. So that's what I'm doing. The ideal strategy for this is I want to just keep collecting the premium without necessarily having to sell the shares to back up the contracts, because I am long hold on all of these positions, right? Like Plug, Celsius, Fubo, Honest, those are the ones that I have covered call contracts that I've sold. and I just want to keep collecting premium for them, and I don't necessarily want to sell the shares. Of course, if I sold the shares, all the strike prices are above my cost basis for each one of those stocks, so I will make money anyway, right? Worst case scenario, I make money by selling the shares at a higher price than I bought them for. That's the worst case scenario. And then best case scenario, the price of each stock, like the value goes up, but it would be like right under the strike price. So it won't meet the strike price, but I get to keep the premium, but I also have the appreciation of the stock shares itself. So that'd be the best. And I'm just gonna keep, you know, recycling the same 100 shares or however many hundreds of shares I have into new covered call contracts every month, and then make that $500 goal. And here's another disclaimer for you guys. This is not the main strategy that I have for investing, okay? It will always be good quality companies that have a lot of growth opportunity, may or may not have dropped in price big and are recovering, or just has a lot of growth opportunities and it's meant to go up in a longer time horizon. This is just a way for me to play a little bit of a mini game in terms of how can I squeeze some more dollars from these long positions I have at a short term without actually risking anything, right? Like what I explained, I cannot lose money doing this strategy, right? The only way you can like really lose money, which you really don't, is if I do a covered call and the price of the stock goes down, in which case I didn't actually lose money unless I sell it at a loss. But that has nothing to do with the covered call. That would just be I'm holding the stock and then the shares go down in price. So like it has nothing to do with a covered call strategy. Just the stock price goes down. So yeah, this is my new obsession. That'd be so cool if I can get like to a consistent 500, and then maybe once I get better at this, because like I said, I just started doing this like last week, and I've just been absorbing so much info about covered calls, that now I have a pretty good grasp at it. I just kind of need to like do more practice in just getting reps doing it, so I can get better at finding deals of contracts that have good premiums on the options chain. And by the way, if any of this is like going over your head, just go on YouTube and look for like other guides. I'm not gonna make like some good guide about call options and contracts because I'm not an expert at this. I can show you how you can do really good on a long-term strategy in investing, which I have a video of. I'll link that in the description of my long-term investment strategy. But when it comes to options and stuff, I'm still a baby, so I'm bringing you guys on this journey of how I'm gonna develop and get better at this. Who knows, maybe I'll become an expert one day, and then I'll tell you guys how to really get good at covered calls. And so yeah, I'm trying to master this covered call thing, and I'm starting to get into the flip side of covered calls, which is cash secured puts. So imagine it's like the same, you're selling put contracts instead of selling call contracts. And that's a video for another day because I'm still learning that, and I'm still seeing if I can employ that strategy into my portfolio. You do need a little bit more cash to do cash secured puts, which I have a little bit of, but we'll explore that for another day once I actually start doing it and I have some news to tell you guys. But anyway, thank you guys for watching this semi-convoluted video. I hope you guys learned something, and if you have any more questions, which I'm sure you guys will, put it in the comment section below, and I will type a comment and to answer your questions down there. And if there's enough of them and it's like consistent on what you guys want to kind of get clarification on, I will make a video that I will like semi-prepare for, so I can actually have a better explanation for you guys, and you guys can actually understand what the hell I'm doing. Because if you're just a beginner investor, this totally doesn't make sense, and I would not recommend doing this if you're like a beginner at investing, because it's got so many moving parts that get your base of like how to value companies, see growth levers, and see if a company has opportunities for long-term growth before like messing with any of this stuff. Like I said, not financial advice. That's just what I would do if I was talking to someone who is a beginner investor. Anyway, thank you guys for watching this video. If you have any questions, put it down there, and maybe I'll have an outro clip right after this. If you guys want to see my thoughts on Palantir, SoFi, Fubo, Nike, I have a bunch of videos that I just put out and they're all on my YouTube channel, so go check them out. If you guys want a beginner's guide on how to invest, a beginner stock strategy that helped me triple my money, I'll link that in the description below. I'm also going to come out with a video on how to research stocks. Like, I just realized, like, I talk about the strategy, but I don't talk about, like, how do you know if a stock is good quality or if a company is a good quality. And so I'll do a beginner's guide on that as well. And I think it's gonna be really good. I'll screen record it so you guys see step by step what I do when I research stocks. And I'll research some of the stocks that some of the people have left in the comments. So I'm really looking forward to making those videos. Guys, do your due diligence, empower yourself to make more, work freaking hard. And as always, let's make this money.